investors should appreciate the fact that this buoyancy in stock markets globally as well as in emerging markets like India is a liquidity driven rally. This is a rally driven by humongous capital flows from the developed countries of the world. We know that the central banks of the world, the US Federal Reserve System, the European Central Bank, the Japanese Central Bank, and the Bank of England have all been following an ultra loose monetary policy. Interest rates have been at record lows. Particularly the US has been buying bonds under the QE1, QE2 and QE3 quantitative easing programs. This bond buying by the major economies of the developed world have unleashed humongous liquidity in the global economy. This liquidity has been chasing asset classes. Presently, a very important factor that has to be kept in mind is that there is a rotation globally from debt to equity. Debt has been yielding negative returns. For instance, in US, the yield on 5-year bonds is 0.7%. So with an inflation rate of around 2%, investment in debt is yielding negative returns, negative real returns, that is, from day one. So this situation is unsustainable. So consequently, there has been a shift from debt to equity. And this shift has been facilitated by the risk on globally, and this risk on in turn has been made possible by financial stability in Europe and rest of the world. A major concern in stock markets presently is whether the capital inflows will be impacted by the unwinding of the quantitative easing programs, particularly in the US. There was a remark from Federal Reserve Chairman Ben Bernanke in their last meeting that they might consider unwinding of the quantitative easing programs. But actually what the Federal Reserve Chief said was, and I quote, "If and when the US economy comes back to high growth, we will consider unwinding the quantitative easing program," unquote. So there is a very important condition here that this unwinding will start only when the US economy comes back to high growth and low unemployment. The US economy is certainly coming back to growth, but it is far from high growth, it is far from robust growth, and unemployment still continues to be an area of concern. Therefore, we feel that the quantitative easing program, this bond buying program, injecting liquidity into the economy, will continue throughout 2013, and the tapering of the program might start early 2014, and they might terminate it by the end of 2014. So there is no immediate concern of unwinding of the quantitative easing program and the capital flight from emerging markets like India.
Experience the freedom of trading on mobile. Geojit BNP Paribas presents FlipMe, the award-winning new generation mobile trading platform. Now make informed investment decisions wherever you are. Geojit BNP Paribas.